Hey, what's going on, guys? This TerrenceRe, and I'm back at you with another stock market update. Right now, looking at the tape, we got the Russell just turned green on the day. It's still early in the morning, but all four major futures opened up lower. You had the S&P 500 futures were low. That right now currently down 11 handles. The Nasdaq futures are down about 50 handles. The Dow futures are down about 59. Now the Russell, you guys know I like to watch the Russell because it generally leads the market. It is the more volatile of the four most of the time. Sometimes it's the Nasdaq, and the Russell has turned green on the day. I don't expect a whole lot of movement today, just because I know that Um, we're awaiting some news, some big news tomorrow. We're gonna get inflation numbers. We got CPI coming out tomorrow. If you take a look on the screen, I have the expected move for the S&P 500 for the week. And you guys know I'm big on talking about the expected move. And so for the week, the expected move coming into this week was only like $50, right? So you can see how tight this range is. So basically anything outside of that is expected, or excuse me, inside of this range would be expected. Now this bottom range right here, on the bottom end of the $50, you can see it coincides with the gap. So let me show you. One of the ways I like to look at support is right here with this gap. This this gap coincides right here with the expected move. So not only does the technical analysis begin to line up with the quantitative analysis, now the expected move is derived from implied volatility and then options. So on the option chain, so they're using the buying and selling and positioning of options, and they're using implied volatility to calculate the expected move. I want to save that, so that will be on there. Yes. All right. So we will be. So now we already got a support for the week for the S&P 500. Now let's take a look at. Now yesterday we had some big news come out. Qualcomm is going to be um, producing the chips. Let's take a look. It should be. Now actually I did a video yesterday which was pretty funny. Got all the way through the video, and I had no sound, so I could not put the video out. So I was like, well, I just come on today to do it. So basically, Qualcomm and Apple have struck a chip supply agreement. So they're going to be supplying. I want to say it was out through 2026. Here we go. Qualcomm gains after deal with Apple to supply 5G chips until 2026. So I knew they had struck a deal. Now you guys know I'm not real big on the news, other than the fact that I want to see why. Maybe it'll show you the catalyst for the movement. Now, when I go to the Qualcomm chart, let's go ahead and take a look at it now. Might as well. Then I can come back to Apple. So we can come to Qualcomm and we can see this major gap right here. That was the reason for the gap up. Now, even though the candle looks red, this was a big day. It gapped up and it finished a little lower than it gapped up higher. So you see it gapped up higher but finished lower than the opening, right? And now you can look, if you look left, you'll see support over here at a gap. So let's draw that. So we can mark that as major support. So I'm basically doing a little support and resistance analysis right now. You see that right there? That's a nice support level, because we see that, and we got a doji candle right here. So we got a doji candle right here at this low. Now, couple that with a crossover on my stochastic, this may not be a bad place to jump in and do something. If it's going to establish this as a support level, we got lower lows on price action. Let's look at the MACD. MACD, we got a cross right here. So we got the momentum slowed down. We momentum has changed direction while price action had continued to make lows. So that now we got, divergence, bullish divergence. So this is why I would look at the news, see the news, and say, okay, this is the explanation for that. And you can see that Qualcomm has been on his butt. This is just showing the 6 months. But if you're looking at a 6 month period, let's pull it out a year. If we're looking at Qualcomm and we go out a full year, as soon as we get it to pull up, let's see. Let's pull out. So for a whole year, you can see that basically Qualcomm been in a little range. This was the high up here right around $140, about 139 and some change. And you can see it's just been bouncing between 139 and what basically the low was 102. So if I look over here, I think it'll show it to me somewhere over here for the here we go. So the 52-week low was 101.47 and the 52-week high was 139.94. So a range of about $38, $38, $39. Now we're seeing a gap higher. It could move up to try to fill this gap up here. So, a decent way to kind of play this. We can go to intraday, but this ain't a bad place to, if you buying low and trying to sell high, just by definition, we're closer to the lows of the year than we are to the highs. So we could get something here. You maybe put your stop in down here, got about a $7 stop, and you can shoot for a 1-to-1. You can shoot for the fill of the gap, which is what, about $17. So there's no guarantee. If it was me and I was playing Qualcomm, which I may a little later, I would probably do something like a cover call or something like that. Or you could sell a put. Maybe you sell the. Now it does have earnings November 1st, so I would stay. I would come ahead of earnings, maybe 38 days. And you could sell the 105 put. You're outside of the expected move, which is only $6.60 for the next 38 days. And there you go. It's not a bad trade. Get a little bit of juice. If you want to be a little bit more riskier, come up to the 110 and collect the 268. Sell the 39 Delta. Let's go take a look at Apple's. Now, Apple has been getting beat down. I do believe, I'm not sure if it's today or tomorrow. Let's take a look and see what the news say. I'm over here on the TastyTrade tab. They have, or you can look on the news tab. Now I know they've been having problems with in China. China has been China told their government employees that they could not use their iPhones, and I think it was just at work. I don't know if they told them they couldn't use them at all, but I don't think that's the reason why the stock is had a tumble. It was due for technically. It should, look at it technically. If let's take some of these drawings off and let's just look at, a naked chart. Take the indicators off. Look at it. See, I already drew these trend lines right here on this channel. So when you have a channel like that, you can expect for it to break. Once it breaks this line, it didn't even look back. It just dropped. That's just technically it should have done that. And it was overdue. It's you don't want to see something parable. If something just keeps going up, eventually it's gonna come down, right? I don't care what they say about the news. I mean, maybe the news coincided, or maybe they found some news to go with it, whatever, right? But this is we needed that. This is a healthy. This gives buyers or people who believe in the stock Apple to be able to get in. So then you gotta this drop almost like a V right here. So you get that, and then it gap down again. Me personally, I don't know if it's done going down. I would not step in and buy right here. Just me. Now, if you're a long-term trader and you really don't care, some people, man, I'm gonna hold it for 10 years, and then if that's you, you can buy it and you can afford to sit through it, sit through the down move, then go ahead. But a smarter way to do it. Me, if I had to make a trade, I'd be selling puts. Come right out 38 days. I'm right around here at the 23 delta. Sell that 170. Right, you're right at the edge of the expected move range. You can come right here and sell. So basically, if we put this on curve view and we look at it, let's see, you can see basically you are, where you at? Okay, I'm trying to get it where it's in the whole screen. There you go. So basically, let me go back to the table and let's put one on here. Boom, sell that. Now let's analyze it. Go back to the curve tab and look at it. So basically, you would be selling your put if you sold the 170. You're somewhere right around in here, right? Um, Now, what I wanted to do was, let's change that up. There you go. So now you're looking at, yeah, you're somewhere right around here. Your break even is right at around 168, somewhere right around in there. So this line right here, it would be like one standard deviation. That's two standard deviations. So you're right at the end near that. So you're getting outside of the expected move and getting away from. It's a real low risk trade. The probability of profit is 79%. Probability of 50% of the max profit is 90%. So basically, you got a 90% chance of keeping half of this if you just shoot for half. So if you collect, basically, if you take in 177, instead of trying to keep the whole 177, just say you want to make what $90, 80, 88, $87, 88. You would just buy it back at when it gets to decreases down to 88, and then you got a 90% chance of making $88 on this trade. So that's shooting, hitting a high probability trade, putting yourself, basically letting the system do the math for you. So that's what I would do if it was me. And you say, well, it's a bullish trade. Why not just buy the shares? Well, let's say Apple goes lower and you put that trade on. If Apple goes lower, instead of buying it here at 178, you saying, hey, if I'm gonna own it, I'll own it at 170. 170 minus the 177 that you collected in premium. So basically, you get put the shares, you'd be somewhere around 168, 23 or something like that, be your cost basis, instead of getting in right here at 178 and then being down by the time it gets down there. Now, if it goes up, you probably would have made more money if you would have bought the shares. But I just prefer to, even when I want to get long, unless it's breaking out. Now, if this stock was breaking out to the top or something like that and you want to buy the shares, then that's something totally different. But when it's going sideways like this or leaning down, I'd rather sell into strength. Let's take a look at, I have some more stocks that I wanted to look at. We looked at Qualcomm, we looked at Apple. Let's take a look at Tesla. Now, Tesla is beasting. If you go back and look at my video last week, titled the one I did with the AI artwork, I put on there Tesla, more business for Tesla. And I talked about how they're getting all the EV charging stations, and basically, even if you don't buy their cars, the other car makers are going to be using their charging stations. So they got something, some type of different kind of connector that all the other car makers will be able to use to charge their vehicles. So that's more revenue for Tesla. And I did that video and I talked about a breakout in this area because you can see this little box right here where it was consolidating, and I did the video last week, and lo and behold, it gapped up on Monday, and look, it's rising today as well. It looks like Tesla is coming to fill this gap up here. I'm gonna bring my indicators back on because I want to be able to see. So it's not over. We see it surging on the MACD, and it is not overbought yet. Not the RSI is only on 64. So we still got more room to run in Tesla. So I like the stock. I like how it looks right now, and business wise, it's setting up to. I could see it. I think I seen that Morgan Stanley. Let's see. Let's look at Morgan. One of the banks. I can't quite remember which one it is, but one of them raised Tesla's target to like 400 or something crazy, right? So Tesla is definitely. If you ask me what stock would I hold, if I had to buy and hold one stock for a year and it's the only one I could hold or something like that, it would be Tesla. That's just me. Um, yeah, it can move the other way as well and drop because it's just that volatile, but you make more money in volatile stocks. So we can see it moving up. Now, once it hit this level right here and close this gap, this is a major resistance level up right around 290. You got one right around 282, 281. Well, let's just call it 280. I expect to see some resistance at 280. And if it breaks through there, expect to see it fill the gap, and we should see some more resistance right around 290. So that this gap right here between 280 and 290 should serve as some type of resistance for Tesla. That doesn't mean that it can't break through, but it does mean if I'm in this doing some type of intraday trade, or I'm just trading in here, look, I'm looking to book some profits in here. Or like a lot of times people just get bullish and just want to stay bullish. Me, sell calls against your long position. Don't just sit in it. I expected to get in this area and chop, or maybe hit in here and then pull back some. Now it could pull back some and then blow right through here, but if you are doing some type of scalping, intraday trading, be careful right around 280. 280, 282 is, if especially if I'm trading today. I'm looking to pull my profit out right around 280, and then let it pull back some, and then maybe reload, kind of pull back like what they call a rubber band trade, something like that. And then like a rubber band, when you pull it back and then it explodes higher. So I like to see a pullback once it gets here, and then if you want to buy again, and then get ready for that. Meta, the last one I wanted to talk about. And if you watched the show last week, I was talking about 310. And look at it, got right up to, what is that? We call that 309.07. Just won't let me be 100% correct. But I called the 310 level based off of intraday trade. So right there, I wouldn't try to. It could go up there and touch the 310 mark, but I think that may be close enough. It kind of just chopped around up there. So I would see what we would look to see what Meta's going to do. Now we do have a crossover on the moving average, so it could explode too. I just think that with the tight frame that we have, we go back to the SPX tight range that we got for this week. For the most part, I'm expecting right around noon for the market to just chop sideways and get ready for that news tomorrow. Once we get that news tomorrow, the market will pick which way it's gonna go, and then we're gonna get a big move either way. We either get a big move down or a big move, but tomorrow after the news, we'll get a big move, in my opinion, and we'll explode whichever way it goes then. So I think that the market will see what Meta got to its mark and now it's slowing down. I think Tesla gonna do the same thing. I think Tesla get up right around in here and then slow down and then chop for the rest of the day until we get that news tomorrow. That news tomorrow give us our catalyst for the rest of the week. So hey guys, hopefully you got something out of this video. Hit the like button, um, hit the subscribe button, and also share the video and let me know what you're trading. Oh, something real quick. I do want to go over Meta long term. I had a viewer ask me about my long term targets for Meta. So let's do it. Now I'll be honest with you, I generally do not trade um, looking at long term charts. Every now and then I look at a weekly, but I don't be in trades that long for me to look at them, but I will because it was requested, right? So now what we got up, I got a monthly chart up. Each candlestick is 1 month. Now, I've said it before in the past, 6 to 8 candlesticks in the same direction, whether it be up or down, I'm looking for a counter trade. I don't care what the stock is. I don't care. Like, so if I'm trading on a monthly, and I guess I get around 6 to 8 candlesticks, I'm looking for some support or resistance in that area, and I'm looking to make a trade because I seen a study. I don't remember where I think I seen it on TastyTrade Network, but I seen a study about candlesticks and like straight up days and straight down days, and that's right around that range. And once I get to 9, I'm definitely going the other way. So, but I generally don't look at monthlies. But if I had been looking at monthlies, let's check it out. 1, 2, 3, 4, 5, 6, 7, 8, 9. Then look what we get. This candlestick right here. Now, this is early in the month. Like, well, we're almost midway through. See how this candlestick, the body is staying inside of this one. If it continues, that will be a harami. Early on, that's what I think is gonna happen. I think I could be wrong though. This is it take a month for this candlestick to play out. I think this candlestick will stay within this body. So for me, if I'm trading on the monthly, I I would not get long Meta based on this monthly chart right here. Ain't no way. Just looking just technically, I don't care what's being said. Now I could be wrong. I'm just doing this. I don't normally go this far out. What I would say is this. I would put a trend line up above this high, which is what, right around 326, and then this low, which is 274. I will draw lines here and here. If I get a break in either direction, that's the direction I would go. If this candlestick does go outside of this candlestick and goes higher and breaks higher above this candlestick, I would take it up. And even if it stays here and then the next month it starts to move up, I would take it. I would take it as soon as it broke out of here, or I would put a buy order and then I would take it to go higher and take out the highs. If this candlestick was to go lower, yeah, if you're in the shorting, I would short it, and then I would short it. I would look left, and I would say support would probably be right around 230. So I was short from 274 down to 230. But right now, just looking at it for me, this is trading in a range. And would it trading in this range? I don't really have. I need to see it move one way or the other, just because of this red candle. And we had consecutive candles, 9 months of straight beasting in the market. So just based on that, we needed this candlestick. So if you're a believer in Meta, but once it takes this candlestick out, then I think it's going for the highs. So it break above 326. I could see it going all the way to 384, taking that high out, being up somewhere around 390, and then at that point we'll reassess again. So I hope I answered that viewer with my analysis on that, and that's just my take on it, right? You can compare it with yours and then see what you got. So go ahead and hit that like button. guys, and I'm out. Peace.